Hello and welcome to 20-2 Work Together. 20-2 is about notes payable, and so we're going to be journalizing transactions in regards to actually signing and receiving the note or receiving the money. We're going to be journalizing if we pay the principal and interest, and then we're going to also be journalizing if we have an extension of time, meaning like the original payable was for 30 days, 60 days, 90 days, and now we're going to extend it some more time. So we are going to start off with our 20-2. We're going to use the current year, journalize the following transactions using page 3 of the general journal, page 5 of the cash receipts, and we're going to use source documents as check, receipt, and memorandum. So the first transaction is on March 3rd. We signed a 90-day note for $6,000 with First National Bank. So you'll notice that these numbers are exactly the same numbers that we actually used in 20-1. So they should be familiar to you. So our first transaction is in our cash receipts journal. Our date is going to be on March 3rd. Our accounts title is going to be notes payable. Our source document is receipt number 279. And this is a payable, so we're going to have a general credit of $6,000. But we received cash, so we're going to have down here in our cash debit $6,000. Okay, so that's a nice, easy transaction. On the 18th, it says that we signed a 60-day 9% note with Dry Creek Company for an extension of time on this accounts payable. So this is not going to be in a cash receipts because we had received the money before. We're trying to get an extension of time. And so what you're going to see is that we are going to go to your general journal. We are going to date this March 18th. And we are going to be doing accounts payable, Dry Creek Company. Our source document is going to be Memorandum 288, and we are going to be extending that for $2,000. Our credit is going to be notes payable. Notice that I indented just slightly. So remember, on the general journal, we always start with the debit first, and then we do the credit. And I indent just slightly on there, and we're going to have a credit of $2,000. Okay, so that's for our extension of time. Then it says to journalize the following transactions on page 9 of the cash payments journal. Use the maturity dates and maturity values calculated in the Work Together 20-1. And so we have here paid cash for the maturity value of the $2,000 note, check number 255. So we are looking here at May 17th. And if you remember, that's the date we calculated last time whenever we were doing our calculations. We had May 17th and June 1st. So on May 17th, oops, messed up there. There we go. I'm going to be debiting my notes payable because I'm paying it off. This is check number 255 for $2,000. And I am going to be having my interest expense of the $30. And I have a cash credit of $20.30. And then it says to paid cash for the maturity value of the $6,000 note, check number 263. So we're going to have the same transaction, only this time around it's going to be on June 1st. Again, we're going to have notes payable. This is check number 263. in the amount of $6,000. Then you're going to have your interest expense for the $90, and we're going to have a cash credit of $60.90. So there you have it. We paid cash for the maturity value. So 3 different transactions, 1 for actually signing a note, 2 for having that extension of time, and then 3 for paying cash on the maturity value. Again, if you have any questions, be sure to reach out. Otherwise, I will see you for section 3.